Hey, what's up? What's up? All right, so what I want to show you guys now is the oil charts. Okay, so I am on the weekly time frame, and I am gonna go max. Okay, so any max on the weekly time frame. So the reason I'm bringing this up is because supply and demand will always be according to the charts, and sometimes the economical data has a lot to do with the movement on some of these, right? The economical data does mess with gold, the dollar, and silver and oil. Now, it does affect the markets as well, but these are the futures that get affected the most in general. Overall, you got to remember that no matter what happens, you still got to follow that the supply and demand are always going to be on point. And those are based on the chart in itself. Economical data can only affect the reaction of that specific week, that specific day, that specific moment, that specific overnight, whatever it is, that it can affect that. Now, also the economical situation or data or catalyst will affect long-term as well. So a multiple of things that you can do in order to invest in some of these things, right? So the reason why I bring this chart up is because it's important to note that the last time that we went down basically to zero on oil, this happened because of COVID. And then from there, it had a split, which was USO. It actually split and then it went back up. Okay. So the reaction for COVID was basically done. And then the reaction for this spike here was because at the beginning of the year was because of the news of war. So a lot of that stuff is already priced in and nobody really cares anymore. Does it affect the prices and all that stuff? Yes. Okay, not taking anything away from that. But pointing out that the importance of a chart is more important than looking at some news and don't get biased. At these levels here, you can see that we couldn't even break above that 105, okay? So I'm gonna use whole numbers, 105 or even just that 100 level, okay? Notice that here we tried to hold, we tried to build, and yes, we rallied on up like crazy, came back down like crazy, built a little support here, and then went up, and then that's when we created this, a nice little doji on the top of a supply where there is no specific structure whatsoever. The structure literally is down at below 105. So anything below 105 is considered a good structure. So between 105 and then this bottom right here of like 76 all the way to that 80, 81, 82, that is considered more of your structure where it should hold or just stay at. Okay. Whenever you have supply and demand, the supply is on top, and anything above that, if we don't build on top of supply, right? If we don't create candle bodies here, then that becomes invalid as a new support or a continuing rally. In this case, you see the total opposite. You see the weekly candle created a doji right at above a supply level. And then from there, it just started trending on down and created a beautiful trend. That trend was amazing because now you drop base, drop, and then you base out again right here, that little one. And then you confirm that that is rejection still. So either way, it's still showing that bearish trend to the downside. And then now what we have is we try to accumulate here, and we're actually right below it again. So there's potential that this may drop into this level again. And this is the only level that we broke out from last time. And we are building on top. Okay, I'm not taking anything away from that, but we are showing a lot more rejection, and it's clear because of the candles that are red, they're a lot bigger than the green ones. So selling pressure is still on oil, no matter what the catalyst is right now. It's the chart versus the catalysts that are happening right now. Now, I know there was some recent news about some oil production or whatever it is. Never grab that and be biased towards it, because the minute that you start grabbing that and saying, oh, it's bullish because of that or it's bearish because of that, then that becomes totally wrong, and therefore you're not trading the chart anymore and you're trading the bias to the news now. So The news is an extra catalyst, and if it does help for this to hold and be bullish, then that's good. If the catalyst is negative and it shows that this chart is bearish and it gives it that extra push to the downside, then of course we're leaning bearish. But remember, first and foremost, understand the chart in itself before you start to get a bias towards whatever catalyst may come. Whether it's like a new CEO stepping in or a new upgrade for the company, innovation, maybe a downgrade or an upgrade, whatever it is, always remember that the chart in itself, the way that the direction is going, that's the direction that you're going to go still until proven otherwise, according to the chart in itself, not the catalyst. Okay, remember that. So just to remind you, anything below 93, so I'm gonna use that candle body, okay, that 93, and below 88.50, we're bearish. Above 88.50, then we're gonna hold the range here, build a range. I hope it does, in order for give it strength to the upside or to the downside, whichever one comes first. I really don't care, but I am definitely leaning bearish on this one, and just because it's a drop base, and then continuation to the downside, of course. So that's what I'm going to look for /CL. I think it still has room to the downside since it's been trending down, and we still haven't found some proper demand just yet. Okay, so this is on the weekly time frame that I'm showing you. Now I'm just going to go on the 4-hour and kind of explain the levels here now. So this one, we try to come down. Okay, so we've been trending down, and I think like 2-3 weeks ago, we ended up breaking above, and it was like all good. The dip buy was there, right? So we talked about last time that 92, if it broke the 92, would be bullish, and that's what we did. I believe we traded a lot of calls on XOM, CVX, and a lot of oil tickers, but unfortunately, this did not hold. And since it dropped back down, it actually did the opposite. So instead of the retest holding here, it actually dropped back down, and now it's at the bottom of this level here. Okay, so what looks like a potential double bottom, it's still showing the weakness, the rejection of this. Now, for me to go bullish, I would say above 92 again, because it would have to reclaim that area where it tried to change price action in the past. So these bulls did not show up. And unfortunately, it dropped back down to this level. So it technically still got control points from all the bearish plays out there, bearish swings, all that. It's still being controlled. No matter what's going on, remember that the chart first comes first, and then all your economical data is just added on extra volatility. So that's kind of my breakdown on /CL oil. Please check out the tickers. The tickers like XOM, CVX, and there's a couple other ones too, but Oxy, sorry. Oxy. As you can see, a lot of these are trending back down, and they're not continuing to the upside. There was no continuation play, and the breakouts were temporary, and they're just coming back on down, right? The biggest thing that I want to look for is now solar. I think solar is going to be on the reversal point, and let's go check out the weekly real quick, kind of show you guys what I mean by this. This here is basically hit a top right here, and we couldn't break above the first time. The first time we tried to break above, we went up, created a supply, and then flushed all the way down to this bottom, creating a double bottom down here. Okay, so the history repeats itself. They try to come back up, and unfortunately, those bears are still strong, and they're bringing it back down. So the weekly time frame looks bearish. We could probably potentially come back down to the 76 and 78 based on the weekly time frame. So now I get to show you the 4-hour. I want you guys to keep in mind that the sectors may rotate just a bit in this coming week. A lot of important levels that we're seeing, and a lot of importance of data and economical stuff that's going around. So there may be some changes all across the board. So you just got to look out for that and pay attention. This is why I'm looking at solar, because it got rejected. Now I'm going to show you a few tickers. So below 82 and 80, it's actually on the weekly watch list too. I'm going to look at a few solar tickers, right? The biggest one right now that I'm looking at is FSLR, which I showed you guys the breakdown. It has potential to create a supply and drop back on down. The other one is showing you JKS, part of solar. It looks like we couldn't even keep trending up. So it just looks like it's just, you know, basically just trending back on down. The other one is going to be run. Okay. This one, again, lots of rejection. So you can see it by all those wicks that are being formed. Here's a huge wick right there, right here, even that green one, huge wick. So lots of wicks, and then the selling pressure on Friday. And literally we're right here at a support, which is probably nothing. And it's probably going to continue on down, right? So just giving you guys a heads up on some of these tickers. The other one is ENPH. Sorry, this is energy. This one has a huge gap here on the daily that people are going to look at, but either way, keep levels right here at 270, 250. And some of these are looking like they're going to downtrend too. XLE, this one might catch some attention for energy, and solar may go a little bit of the opposite. So this one's at a perfect level. I would use 80. Honestly, I would use 80 above or 80 below. If we're above 80, let's go long on XLE. If we're below it, let's go short. So there's a lot of stuff going on, guys, and a lot of sectors that are moving differently, and a lot of changes may happen this whole week. So we have 4 days. It's a slow week. So just be aware of that, okay? So I want to break down oil for you guys. Want to show you a little bit more of TAN, and hopefully this gives you a better insight into the rest of the week. All right, guys, I'll see you on the next one.